The charts are shaping up for the most important monthly candle close for Bitcoin since November 2020. What does it all mean? Let's go ahead and jump into the charts. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. Today's video is a big one as Bitcoin is approaching that major monthly candle close in just around 24 hours. And this monthly candle close is perhaps the most significant monthly candle close in terms of a technical perspective since November 2022. We're going to be discussing the significance of this close, the price point Bitcoin will need to close above for a continuation upwards, the short-term charts, the current price action, and so much more. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in joining our VIP channel, we have less than 24 hours remaining on our 10 to 30% off sale. You'll get access to our main VIP group where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chart and education chat, our trade setup chat, our news, our help, and our daily video chat. We have over 600 members in there and an absolutely phenomenal trading track record, which you can go ahead and check out via this link. You can see 31 months of data, 80% win rate, over 850 trades, all logged with exact entries, exact targets, and exact stop losses. For more information, check it out. Let's dive right into a video. Starting on the market data. How are we looking for today? 24-hour volume is down 10.29%. You can see that on the top left-hand corner, sitting at a total of $78 billion. 24-hour liquidations are down 29.5%, sitting at a total of $76 million. Looking at those liquidations, we can see a pretty clean cut between longs and short positions over here, with 41 million in long liquidations and 34 million in short liquidations. Taking a very brief look at the short-term price action, over the last 24 hours, we have seen a whole heap of chop around that 38k range. That dotted trend line is in fact at 38k level. We have seen strong moves above it, followed by crashes below it, so chopping both longs and short positions over here. Moving over to the broader markets, taking a look at that DXY, we can see we have a few different scenarios we've gone ahead and drawn in over here. Primarily, we are retesting this base level of support. So we'll go ahead and remove some of this stuff. We can see this green level is our base level of support. We actually have temporarily dropped below this level, which is indicating, again, a potential loss of the support. Upon losing the support, we do expect a continuation towards this lower range, which is around 101.5 to 101. Of course, if we do see that correction downwards, this is going to be very bullish, okay? Very bullish for Bitcoin, for the S&P, and for the Dow Jones and other traditional assets. Looking at the market over here for DXY, if we do see a bounce from this level of support, and that is possible, support is still technically support, we could see a continuation up to our downtrend. And this diagonal downtrend is meeting confluence of this local horizontal level. If we do break above this diagonal downtrend, that is when we do enter a uptrend again on a higher time frame for the DXY, targeting this green box. So currently it is looking bearish. Moving over to the S&P 500, again, a lot of different scenarios are going ahead and drawn over here. But we have seen our primary scenario play out. Our primary scenario was a break over this short-term downtrending diagonal trend line represented by this black line will result in a preliminary retest of the macro downtrending diagonal trend line represented by the retest at the all-time high, the retest on July 2023, and of course the retest just now within the last 24 hours. So currently we are at resistance. the DXY is at support. If we do see the S&P 500 break above this diagonal trend line, we are looking for a continuation on the macro scale to retest these all-time highs at 4,800. Until then, resistance is resistance, so I would not be looking aggressively for a continuation upwards until this trend line breaks. At the moment, again, we could see a correction back down to this lower level of support. If we do lose this horizontal level at around 4,500, that is when we will develop a short-term downtrend. Moving over to the Dow Jones, exactly the same thing over here, guys. The chart hasn't updated, but we have come up and we've retested this diagonal trend line. Again, the same talking points as we discussed on the S&P 500. If we lose that respective horizontal support level, we'd be looking for a correction. Until then, it is at resistance, but on the higher time frames, it is objectively looking bullish. So the charts, the markets are looking relatively bullish. Let's go ahead, guys, and jump over into Bitcoin. But before we do, a quick word from Bitget and BingX, and then we'll dive in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's get into Bitcoin's charts, discussing the macro. So really quickly, what are we discussing today? We're going to be taking a look at these two charts here. We're going to be taking a look at the macro chart on the monthly scale from both a structural perspective, a 4-year cycle perspective, and then taking a look at the monthly scale from a technical perspective. We'll also take a look at the daily chart, how the price action is developing around these levels of resistance and support on the higher time frame, and then finishing up with the short-term price action. What is happening in the short term? What are our key trigger points? What are the next potential moves? And of course, what you should be watching out for continuations or directional decisions. So let's go ahead and start on that monthly candle. As you can see over here on that right-hand side, we have about 23 hours and 59 minutes. By the time you're watching this video, about 23 hours until that monthly candle close. And this monthly candle, as we discussed at the start of the video, is the most important monthly close from a technical perspective since November 2020. The reason I say that is because of this indicator right here. The indicator we're looking at is the Bollinger Bands, and we discussed this a few days ago, but now we're coming up on that close. It's paramount that we discuss this right now. If we take a look at the prior cycles, primarily, the point of which the price action, after traveling under the upper band, which is the upper blue line of the Bollinger Bands, after entering the bear market, retests and closes a monthly candle above the upper bands, is, according to the Bollinger Bands, the point of which we enter a high time frame, high confidence uptrend that continues until a new all-time high, and most importantly, until we lose that midline. So it is suggesting that we will remain above the midline, which is going to be that orange line, okay, the entire time until we make an all-time high, which is actually mind-blowing if you think about it. What it's really suggesting, very simply, is telling us if we get a monthly candle close above the upper band of the Bollinger Bands, okay, we cannot expect the price action to break under the orange line, which is a midline, until only after the all-time high has been made, which is crazy good for the bulls and very, very obviously important that we fulfill this according to our 4-year cycle. So taking a look at this, guys, we can see in this instance, May 2016, we closed the monthly candle above, remained above the midline of the Bollinger Bands, until we create that all-time high, and only then did we break below it. Moving over, 2020, we closed a monthly candle above, remained above the Bollinger Bands all the way, created the all-time high, broke below the midline, and again entered that bear market. And we're seeing once again now, over 1,030 days later, over many, many months, we're seeing a monthly retest now of that upper band of the Bollinger Bands. And that upper band level actually ends at around 38,500. So with the short-term chart, if we're looking at 38,500, that is going to be sitting around about over here. So for us to actually break a monthly candle and close a monthly candle above that within the next 24 hours, we need to see the price action break past 38K, break past and close that candle above 38.5. Now you're thinking, well, that's only a few dollars away, but in fact, there's a whole lot of resistance at 38K, which we haven't seen, which we'll discuss in a second. So although we are very close to that, it is still a massive, massive feat that the bulls are going to have to pull off to actually get that monthly candle close. And we just talked about how potentially significant that close would actually be if we do see that occur. So we are definitely watching out for that one, guys. The next one from a technical perspective we want to take a look at is going to be the market cipher A. Now again, the market cipher A will be printing, and it has printed, but it will be locking in a blue triangle indicator in 24 hours. And what this simply suggests, it simply suggests a cross of the 2-3 moving average, but in this instance, we have our settings set on 1517. So 1517 moving average cross will print a blue triangle. Similarly to the Bollinger Bands, when we see that blue triangle print, what will happen is the price will remain above the 50 EMA until we make a all-time high. If we take a look at the 50 EMA, the 50 EMA is the red line, sort of suggesting after printing the blue triangle, we remain above the 50 EMA until we print an all-time high. We cross back below the 1517 EMA, which is reflected by the red cross, which then results in a downtrend underneath the 50 EMA. Okay, so we print the blue triangle, the cross of the 1517, we stay above the 50, we create an all-time high, we cross the 1517, creating the red cross, we break under the 50 EMA, the cycle repeats. So in 24 hours, if we do get that close, not only will we be getting a blue triangle, which will tell us we will remain above the 50 EMA, which is sitting at 25 or sitting around 25.8 now, okay, 26K now, but also the Bollinger Band print, which will be again breaking over that upper band. So two absolutely significant macro indicators are about to flip bullish. They're about to flip significantly bullish in the next 24 hours if we do get that close. Let's go ahead and discuss, guys, what this means in terms of the 4-year cycle and what this means in terms of the next bull market. Because, guys, at the end of the day, these are just technical indicators. These are just overall reflections of the strength of a price action over a specific set period of time. That is all it is. It doesn't tell us anything more than the strength of price action, which is comprised by buyers and sellers, or the discrepancy between buyers and sellers over a period of time. It's not telling us where the price is going. It's not telling us if we're in a bull market. We need to take that information and apply it to our context, which is our structural analysis. So let's take a look at when the next bull run will start. Even if we get the monthly candle close and those two indicators turn very, very bullish, that is not confirmation the bull run has started. That is confirmation we are seeing the same thing play out that we have seen in the prior two cycles. We're seeing history repeat. We're seeing the macro become stronger and stronger. We're seeing higher probability that we'll be entering a new bull market at some point. So we take a look at what a bull market is. A bull market is simply a period, a time period of price action where we have significantly increased volume, volatility, momentum, and more importantly, money flow into the market. That is what a bull market is. It's a period of time where we have excessive buying. Okay, so if we look at the 4-year cycle, the 4-year cycle is broken up into 3 segments. We have the bear cycle, which is here. We have the neutral cycle, which is here, and then we have that bullish cycle, which is over here. On average, each bull phase lasts around 18 to 19 months. If we take a date range analysis from the start to our current, according to the 4-year cycle, we can expect the bull run to start April 2024 around the halvening and end at October-September 2025, according to that 18 to 19 month range. So, are we getting close? Well, yes, we are getting very close. If we look at this, we're currently in November, moving into December, then we have December, we have January, we have February, we have March, we have April, 5 months. Only 5 months, half a year until the halving, half a year until we cross into the bull market phase of the 4-year cycle. But that doesn't necessarily mean a bull market will immediately start. If we take the prior cycles, we saw a few months of consolidation yet still when we entered that bull market phase until we actually initiated this aggressive uptrend. But if we look at our structural levels, we can shine some light. According to the prior cycles, when we break above the dotted trend line of the dead cat bounce high. The dead cat bounce high after retesting the bear market low, okay? And the bear market low is simply the horizontal base of support where when we lost it, we entered capitulation to a new low. We can see significant volatility toward the downside, significant volatility toward the downside, significant volatility toward the downside. So we have that base of support. If we look at the dead cat bounce from that level, that reflects us or represents the dotted trend line. The dotted trend line acts as a major level of resistance, but more importantly also acts as a bullish trigger point for us to enter a macro bull market. So for us to enter a macro bull market, and not just we're in a macro uptrend, we're already in a macro uptrend, but a bull market where we have this surge in buying that, the market absolutely rallies over a period of months. So we see, massive amounts of volatility. We do need to break above that level. We can actually prove that from a trend angle perspective. We take the trend angle from the moment we break above that to the all-time high, and we take that in both cycles, and we compare that to the all-time low. To that point, we can see the trend angle significantly increases the moment we break above that level, which is signifying a surge in buying. Okay, so now we have defined that we need to see two things. We need to see on the monthly scale, the monthly candle close above these levels to signify, again, we have the bullish strength. We're seeing history repeat itself. If we do not get the monthly candle close above 38.5k, it is not the end of the world, as everything according to our structural levels and our time-based levels according to the 4-year cycle is still in play. So although this monthly candle close is the most significant one since 2020, as we have a moment of, or should I say, we have a chance to actually initiate this potentially significant bunch of indicators that we have seen in the past that will result in these macro continuations upwards, it is not the end of the world if we do not see it happen right now, as we do still have a lot of time until we're actually supposed to enter this bull run phase. So keep that in mind, guys. Let's go over to the short-term price action and the daily price action. So as you know, guys, the last 3 weeks have been pretty intense. We've seen a lot of retests around the 38k level. In fact, we've had 4 consecutive weeks now that have either retested 38k or pushed above and closed below. We're currently in that 4th week. This weekly candle closes in 4 days. So we are starting to see a whole bunch of compression at this 38k level. Again, just further reiterating the fact, or should I say confirming our theory, which was 38 to 40k was going to be and is going to be and is currently the most significant level of horizontal resistance between the $32,000 support and the 48k resistance. Remember, the 48k resistance is that dotted trend line according to the macro chart. So we do need to see a break above here. If we do see a break above here, we can expect a continuation upwards. Until then, resistance is resistance until it is not. And if we start to see short-term weakness develop, particularly if we start to see the current trend of which we have been traveling in the breakdown, we will likely see a correction. So let's go ahead and discuss what that would look like, what we will be looking for a correction, and how we can prepare and plan and execute potential scenarios to actually profit from whatever occurs in the market. So first and foremost, let's talk about the bearish scenario because it is the biggest and most complex. So there are a few different scenarios playing out as we speak. and there are a few we have to be aware of that which could play out, and a few we have to plan for. So first and foremost, we have to understand the trend is your friend until it ends, and therefore we are in a major uptrend, and this uptrending support line is providing overall directional support for Bitcoin, and has been providing that for the last 5 or so weeks. And thus, no matter what happens on the short-term price action, while we remain above this uptrending trend line, we are technically in a uptrend moving into resistance. That is a very important thing to note. So if we do want to see a correction, we're looking at 32, we're looking at 30, we're looking to 34, what people are saying, we have to lose this major uptrending trend line first, okay? Because when the price is below this level, it reflects that the price action under this trend line has relative weakness to the price action which has been above this area, above this trend line the entire time, okay? And that relative weakness is nothing more than a reflection that the bulls are starting to lose control and have already lost control, which means the bears are pushing the price lower and they have the possibility now to reverse that trend. So we do see this uptrend trend line lost. I'd be looking for a first target of this red zone, this horizontal support around 36k, reflected as this area, this liquidity grab down at that fake cut. I'll be looking for a retest of that point. If we do bounce from this point, then we'll be looking for 2 scenarios. Number 1, we'll be looking for a retest and bounce because we'll be developing a parallel channel, okay? A retest and bounce from here, continuation and break upwards. Or we'd be looking for a loss of this level where you continue your short towards our dotted trend line, which is our bearish trigger. At this point, we'd be potentially, and this is very speculative as we have not developed a structure, potentially developed a higher time frame parallel channel. From this point, we'll be retesting that bearish trigger. Remember, we have a bullish trigger at 38k, we have a bearish trigger at 33,350. If we do lose 33,350 at any point, we are very likely going to fill the VRPV gap between 33,350 and 30,642. 30,642 is going to be this area of liquidity right over here, which means we will momentarily drop underneath the $32,000 resistance. If we take a look at this level of support and actually go ahead and pop it down to our weekly low, the 30,642 level is actually going to be the weekly high of this candle in June, early June, so June-July. The June-July weekly candle, it is going to be sitting right over here. So a possible retest of this point before a continuation upwards could be likely if we do see a complete loss of 30,350. That is what I'd be looking for. I'd be looking for a loss of this level. I'd be looking to re-enter around about this range over here when this gap has been filled. However, guys, like we've said, a lot needs to happen for that bearish scenario to play out. We're going to have to lose this uptrend. We're going to have to lose this level of support. We'll have to push quite a long time through this area of support and then finally lose that trigger. So we have, again, 1 support, we have 2 supports, we have 3 support, and we have 4 levels of major support before we can actually see that crash, which everyone's expecting to play out. So let's go ahead and take the bullish scenario now, guys. If we do see a break upwards again, we want to close a daily candle with a 30,000 to confirm a break above this level and continuation upwards. Again, the monthly candle, we do need to close above 30,850 to break above the Bollinger Band upper band. That is very significant, but at a base level, for us to break above the $38,000 resistance, we need to close a daily candle above. If we do close a daily candle above, we are looking for the gap between 38 to 40 to fill, which will take us to 40,000. Again, 40,000 is going to be acting as the upper level of resistance within the 38 to 40k resistance zone. This is not a singular point of resistance. This is a zone of resistance between 38 to 40, okay? Thank you for watching, guys. Keep your eyes on that monthly candle close. It's a very, very important one. I look forward to catching up with you guys in the next video. Cheers.